some insurance companies will require you to do an inspection on your home. Of course, if you're going to buy a new home, they're going to want an authorized roofing contractor to do a thorough inspection. They want to know that there's at least at a minimum of 5 years life expectancy remaining on your roof. They're going to want to know, have some paperwork, see what type of condition it is, see what there is, how many layers of shingles there is on your roof. They're going to want to have that type of report. And the same thing goes, for when you sell it. They're not going to require you to do any type of inspections just once you're living there, to just do one every 5 years. They're not going to do anything like that. However, on large commercial properties, that's not uncommon for like a lot of schools to have to do those every 3 years or maybe every 5 years, just because you're talking hundreds and hundreds of thousands of square feet of roofing that's exposed. To have a contractor, the insurance company will actually pay that contractor to go up there. Maybe they'll clear some roof drains, do an inspection. It saves them money in the long run if there's any type of wind damage. Maybe there's some membrane fluttering, things like that, where they can get ahead of it and get that repaired before it becomes a major issue, or before it becomes $100,000 loss. They can try to stay ahead of the game. An insurance inspection can affect your coverage just based off of what type of condition your roof is in. If your roof is only has 1 or 2 years life expectancy remaining, a lot of times they'll require the homeowner to get a new roof installed, or they're going to drop them from coverage. We're seeing that a lot these days. That's pretty common. With commercial, it's not quite like that, but they'll require them to make certain repairs if there's anything that they can see, try to foresee in the future. If there's any type of membrane fluttering, anything like that, if there's some preventative maintenance that they can do, they'll require them to do that, and they'll have to spend that money out of pocket to try to mitigate any future damages. And the insurance company can kind of control that. Otherwise, they will drop them and they'll lose their coverage.